All right, welcome back to my YouTube channel at Illumination of Benji. Kindly subscribe to my YouTube channel and also click on the notification bell so that you can be notified whenever I have a new video I'm dropping. The last video that we had on job and bash costing, I discussed the meaning of job costing, took us through the features, and also how to identify the elements of job and bash costing. I also explain what bash costing also entails. So we are in the process of preparing a question, and now we're going to complete that question in this section of the video. Okay, so on this session, we're going to prepare we're going to determine the prime cost. We're going to also prepare the cost sheet and also the quotation sheet, and also determine the cost price per unit and also the selling price. So let us now go ahead and complete this task. So from what you can see on the screen, we have the direct labor, which is 120,000 units and 0.50, which is 6,000 naira. The direct material, this is the figure, 25,000 naira. We also have direct expenses. And we said in the definition that the prime cost is the addition of the direct labor, direct material, and direct expenses. So for question 1, solution. So for question 1, so the prime cost is, so let's put the naira sign. We have direct labor, which is 60,000. We have direct material, which is 25,000, and we have direct expenses, which is 50,000. So we're going to add up everything. We have 0, 0, 0. We have 5. We have 6 plus 2, 18. 13. So at the end of the day, the total prime cost is 135,000. So let us jump to the second question. The second question said, I prepare the cost sheet for the job number UP 215. And okay, in this question, we do not have any overhead cost. Okay, so we do not have any overhead cost, which is the indirect cost. So let us go ahead and prepare the cost sheet. Okay, so we say, so we go ahead and say the cost sheet up and down. So up and down and down limited cost sheet. So we do not have overhead cost. Okay, so in this question we just say, so direct labor, which is 60,000. So we have direct material, this is 25,000. We have direct expenses, which is 50,000. Okay, so let's move this up a bit. So in total, we have 150,000. So which is also equals to the prime cost. So we now also add overhead cost. So we don't have any overhead cost in the question. So our prime cost is also equals to our production cost. Okay, so 150,000. Okay, good. So let us go back to the question number 3. Prepare the quotation sheet for up for job number UP21. So let's don't forget job number. Let's put the job number there. We're given a job number. Job. So we have a job number. Job number UP215. Okay, so let's ensure you put your job number on it. So please, you can do better by ensuring that your presentation is quite neater and better than what I have done here. So for the third one, we have prepare the quotation sheet. So let's just work that in number 3. Number 3. So number 3. So number 3. So we say up and down limited. Quotation sheet for job number UP215. Okay, so that's the heading. So we have our Naira sign. So we have cost of production. We have, so let me scroll that up. So from our workings, we have direct labor. I'm going to shorten that. Direct labor, 60,000. We have direct material as 25,000. We have direct expenses, 50,000. Okay, 50,000. Okay, that is 135,000. So let me move that up a bit again. So we don't have overhead cost. We don't have. So we have total production cost. So total production cost is 135,000 naira. Okay. So we were told that at a markup of 40%. So we know that markup is percentage of profit on cost price. Okay. So then our markup will now be, you say markup, which is 40 over 100 multiplied by 135,000. Okay. So let's take 1 0 off here. Let's take another 0 off here. So we are left with 13,500 multiplied by 4. So we're going to arrive at the figure of our profits based on the markup percentage given. Okay. So we say 135,000. Let me use my calculator. So 13,500 multiplied by 4. So that is 54,000. Okay. At the end of the day, we have our markup as 54,000. Okay. So at the end of the day, our quoted or selling price is now 189,000. Okay. So the next question, that's number 4. Number 3, the next question says that we are to determine what is the cost price per unit and the selling price per unit. In the question, we were told that we're going to produce 20,000 units of the product. So number 4 now. Number 4. Total units to produce is 20,000 units. Okay. Okay. So let me drag that up. So cost per unit is cost to total cost, total production cost multiplied by total number of units, which is equals 135,000 naira. Please don't forget your naira sign, divided by 20,000. Okay. So let's cancel this off. That's 135 divided by 20. That is 6 naira 75 kobo per unit. 6 naira 75 kobo per unit. That is that for the cost per unit. So the selling price per unit now, or the quoted price per unit, let's say the quoted price, the selling price, or quoted price per unit equals total quoted or selling price divided by total units. Okay, so here from what we have here, 189,000 is total quoted price, as is 189,000 divided by what's the total number of units we have to produce? 20,000 units. Okay, units. So that is going to give us, so let's take off 1,000, take this 0 off. So 189 divided by 20, 89 divided by 20. That will give us 9 naira 45 kobo per unit. 9 naira 45 kobo per unit. Okay. So at the end of the day, we have 9 naira 45 kobo and 6 naira 75 kobo per unit. In some another question can come up and say that we should calculate the profit per unit now. So to calculate the profit per unit, I just added this to it to calculate the profit per unit. Profit per unit, which is equals to what? 9 naira, which is the selling price, 45 kobo, minus 6 naira 75 kobo. Please take note. Take note, which is going to give us 9 naira 45 kobo minus 6 naira 75 kobo. At the end of the day, we're going to be left with 2 naira 70 kobo per unit as the price, as the profit. 2 naira 70 kobo per unit. That is the profit we're going to generate on the individual units, okay, that we're going to produce. So this is a profit. So at the end of the day, we're able to make profit. We are the profit that we are able to determine the profit that we're going to be making on the job that we're going to produce. Okay, so this is a very lucrative job if the customer or the client is willing to accept the quotation. At the end of the day, we've been able to consider our cost price based on the resources that were used for production, that is the direct labor use, direct expenses used, and the direct material used. So in some cases, we may have overhead. So we're going to look at that later in the subsequent videos, and also we're going to look at batch costing. So this is how to calculate your job costing. The questions can come in various ways. It requires you to be able to use the knowledge you have gathered over the years based on what you've learned in the past, okay, to solve some of the questions. These are very simple questions that you can solve on your own, and kindly try it out on your own. And because questions can be coming out in various ways, okay. So thank you very much for your time, and I do appreciate your time, and have a great day. Thank you, and bye bye.